You stare at the screen as the transfer clears. Another rent payment leaves your account. Society has a story for this exact moment. The story everyone tells. You are throwing your money away. You are paying someone else's mortgage. That narrative feels heavy. But in 2026, the math behind wealth building has quietly inverted. The asset you were told would secure your future is now the exact anchor dragging it down. The myth insists that renting is a total financial loss, while every dollar put toward a mortgage goes directly into your pocket as equity. The reality breaks under scrutiny. Homeowners pay massive unrecoverable costs: mortgage interest, property taxes, homeowner association fees, maintenance. In the first 7 years of a standard mortgage at current rates, the vast majority of your payment goes straight to the bank, not your net worth. Rent is the maximum you will pay for housing in a given month. A mortgage is the minimum. The story everyone tells: real estate is the undisputed champion of wealth creation. You are told you cannot live in a stock portfolio. The assumption is that a house is a forced savings account with guaranteed appreciation. What actually happens is a lesson in opportunity cost. Enter the strategic renter. This is someone who takes the avoided down payment and the monthly housing savings and systematically invests them into broad index funds. Over a 10 to 15-year horizon, this liquid portfolio often outpaces the net worth growth of a homeowner. $100,000 locked in drywall cannot compound in the open market. It strips you of critical liquidity during your prime wealth-building years. The math rewards capital that moves freely. The story everyone tells: a 30-year fixed-rate mortgage perfectly locks in your cost of living. It is sold as the ultimate shield against inflation. The reality is far more exposed. Only the principal and the interest are fixed. The hidden carrying costs of homeownership are highly inflationary. Property taxes march upward. Maintenance consumes 1 to 2% of the home's value every single year. Home insurance premiums have spiked dramatically due to regional climate events. These are not fixed costs, they are unpredictable liabilities. An inflexible asset does not insulate you from macroeconomic pressure. It anchors you to severe localized inflation permanently. The story everyone tells: you should buy a home as long as the monthly cost is around 30% of your gross income. It is a golden rule passed down from your parents. The reality is that this rule belongs to a different century. By early 2026, the median home price-to-income ratio has reached over 7 times the median household income. The baseline valuations have fundamentally shifted. Stretching your budget to meet an obsolete benchmark does not make you a savvy investor. It makes you instantly house poor. The financial rules of thumb from a bygone era are mathematically broken. You do not have to feel guilty for missing an impossible target. The target itself is an illusion. The story everyone tells: the tax code pays you to own a home. The mortgage interest deduction is paraded as the ultimate financial loophole, making a massive loan practically pay for itself. What actually happens is a masterclass in lobbying. Following recent tax code changes and a dramatically expanded standard deduction, the vast majority of modern middle-class homeowners do not itemize their taxes. The famous deduction is completely useless for the average buyer. It is a psychological sales pitch. It exists to justify over-leveraging your future for a piece of property today. The tax advantage is a ghost, hollow. The story everyone tells: home ownership is the definitive marker of stability. Renters are painted as drifters, living in a precarious state of uncertainty. The reality of a dynamic economy dictates otherwise. True stability does not come from a stationary physical address. It comes from liquid capital and career mobility. Renting allows you to relocate effortlessly for a 30% salary bump. That single career pivot often out-earns a decade of local home equity growth. Real security is financial optionality. It is a strong cash position. It is the power to pivot without friction, instantly. The story everyone tells: if you do not buy a house, you are failing at life. You are missing the American dream. The reality is that the definition of wealth has evolved. Wealth is having time. It is having flexibility. It is the profound absence of financial anxiety. Maintaining a 4-bedroom property you barely use simply to satisfy societal expectations is not wealth. It is a performance. You can decouple your self-worth from a mortgage. You can choose objective data over generational dogma. Strategic renting is not a failure to launch. It is a calculated, deliberate choice. It is the modern blueprint for lifelong financial freedom, redefined.